Now we will solve the problem of financial statement with adjustment. We have discussed so many adjustment in the previous slides or previous topic. We have discussed so many adjustment, around 18-19 adjustment has discussed. After that, now we will solve the problem. So note down the question first in your paper, note it down, and thereafter you see how this question is going to solve. So the question is, the following trial balance was extracted from the books of Mr. Gupta as at 31st March 2019. So one trial balance is given, and there are two sides. You know the trial balance, one side is debit, another side is credit. In debit side, informations are stock, purchase, wages, trade expense, freight and dock charges, traveling expenses, lighting and heating. In bracket it has written factory. It means it's a direct expense. Stores consumed, it's a direct expense. Rent paid, establishment charges, interest on Mr. Yadav's loan, sundry debtors, cash, fixed deposit. So these are the information of the debit side of the trial balance. Now credit side of the trial balance informations are capital, rent received, loan from Mr. Yadav at the rate of 15% per annum, sales, discount, outstanding wages, trade expense accrued but not paid, and sundry creditors. Thereafter adjustments. After the trial balance, adjustments are given. So number one adjustment is, first adjustment, goods costing rupees 20,000 were purchased and included in stock, but no entry was passed to record the purchase. So goods costing rupees 20,000 was purchased and included in stock. This is included in stock, but no entry was passed to record the purchase. You know, adjustment entry will be purchase account debit. The adjustment entry, purchase account debit, to creditors account, to creditors account, creditors account. This is the adjustment entry, 20,000. Is it clear? 20,000. This is the adjustment entry. We have to do it, or we have to adjust while preparing the financial statement. So goods costing 20,000 were purchased and included in stock, but no entry was passed. So it's an error of complete omission. So you record the transaction in your adjustment. Second adjustment is, loan from Mr. Yadav was taken on 1st June 2018. The loan was taken on 1st June 2018, and you see in the credit side, loan from Yadav is 15%, interest rate is 15%. So if you calculate the interest on loan, interest on Yadav's loan, interest on Yadav loans, interest on loan from Yadav, interest on loan from Yadav, if you calculate it, the loan amount is 20,000, interest is at the rate of 15%, and this loan is taken on, it is given in adjustment number 2, this loan is taken on 1st June 2018 and account is closed on 31st March 2019. So from 1st June 2018 to 31st March 2019. So June, July, August, September, October, November, December, January, February, March, 10 months. So we will calculate the interest for 10 months, 10 upon 12. We will calculate the interest for 10 months. So interest amount is 2,500 is the interest amount. This is the interest amount. And you see in the trial balance debit side, interest on loan is given. Interest on Yadav loan is given. Interest on Yadav loan is given. Yadav's loan is given, that is, it is given 1,500. It means rest are outstanding interest. Rest are outstanding interest. So rest is how much? Rest is 1,000. Total interest should be 2,500 and this is given in the trial balance 1,500. So rest which is not given, that interest is called outstanding interest. This is your outstanding interest. We have to calculate this one. Third one is sundry debtors include an amount of 2,000 due from a customer who had become insolvent and nothing is recoverable from his estate. So nothing is recoverable from his estate. It means further bad debts. It's nothing but a further bad debts. You may say that it's an additional bad debts in addition to the bad debts which is given in the trial balance. So it's an additional bad debts. Next, fourth number is create a provision of 5% for doubtful debts and 2% for discount on debtors. 3 months. Next number is fifth number. Fifth adjustment, 3 months lighting and heating bill due but not paid, means outstanding. 3 months lighting and heating bill is outstanding. Okay. Next is rent is paid for 11 months but received for 13 months. Rent paid for 11 months. It means 1 month is outstanding. And rent received is of 13 months. It means 1 month rent is unearned rent, rent received in advance. We will do the calculation at the right time. And last one is stock amounting to rupees 90,000. This is the closing stock on 31st March 2019. This is regarding the closing stock. Is it clear? Closing stock. Now we will solve the question. Okay. First of all, we start with the trading and profit and loss account and thereafter we will prepare the balance sheet. So the format is trading and profit and loss account of Mr. Gupta for the year ended 31st March 2019. The format is in T-shape format. It's in T-shape format. So one side is your debit, particular, detail, amount. The same thing will repeat this side also, particular, details and amount. This side is your credit side. Here in details we do the addition and subtraction and final figure we will write in the outer column. So now start with the, come to the trial balance debit side. Okay, debit side first information is stock. So stock which is given on 1st April 2018, that stock is called opening stock. So opening stock, you write it opening stock. Opening stock is, it is 65,000. Directly you write it in the outer column. Next is purchase. Next information is purchase. So purchase, you write the information of purchase in the inner column 7,10,000. There is no purchase return. You see in the credit side, is there any purchase return or return outward? No information regarding the purchase return. But one adjustment is related to the purchase is adjustment number 1. Goods was purchased included in stock but no entry was passed. This one. purchase account debit to creditors account. It's an unrecorded purchase. So you add the unrecorded purchase, unrecorded purchase which was not recorded by you. Okay, unrecorded purchase, you add it. Okay, this is your what? Adjustment. So 20,000 you have purchased but not recorded in the books. So total purchase is 7,30,000. 7,30,000. After purchase you come, next is your wages. Wages is, you know that it's a direct expense. Wages is direct expense. So is there any information regarding the wages is given in the adjustment? Regarding wages, no information is there. So we can write the wages in the outer column, that is 22,000 wages. 22,000 wages directly in the outer column. There is outstanding wages which is given in the inside the trial balance in the credit side. That is not an adjustment. That for that account, outstanding wages which is given in the trial balance credit side, that will reflect directly in the liability side of the balance sheet. That is not an adjustment. So outstanding wages. After wages you see freight and dock charges. Freight and dock charges. Freight and dock charges. There is no as such adjustment related to freight and dock charges, so we can write directly that amount in the outer column. We can write directly that amount. Next is lighting and heating. Lighting and heating. This is related to factory. That's why it's a direct expense. It is related to factory. In additional information, number 5, 3 months lighting and heating bill due but not paid. 3 months bill is due but not paid. It means it's an outstanding. So do the adjustment related to that. Lighting and heating, it is factory. It is related to factory. That's why it's a direct expense. So this amount is 7,200. You write the amount in the inner column and then you add outstanding lighting and heating expense. Lighting and heating expenses, which is given in adjustment number 5. 3 months lighting and heating is due. So total lighting and heating is 10,200. 10,200. Thereafter you come, after lighting and heating, next is stores consumed. Stores consumed is direct expense. Stores consumed is direct expense. This is 2,000. Stores consumed is 2,000. After that you see, is there any direct expense in the debit side of the trial balance? No other. Now come to the credit side. This side, direct income are sales. By sales. There is no sales return. There is no sales return or any other adjustment related to sales. So sales amount, we will write it directly in the outer column of, in the credit side of trading account, sales account, this one. Okay. Now come to the adjustment. Number 1, it is not related to trading. 1 is already we have done it, that is unrecorded purchase. And thereafter last adjustment is related to closing stock. Last adjustment is related to closing stock. You see the closing stock is how much? Closing stock is 90,000 is the closing stock. 90,000 is the closing stock. Okay. That's it. 90,000 is the closing stock. Now what we'll do, we'll do the total of credit side and debit side, and we will see which side total is more and which side total is less. Okay, we'll do the total. So credit side total is more. So credit side total is 0, 0, 0, 0, 4, 10. 10 lakh 40,000 is the total of credit side. 10 lakh 40,000. Now you do the total of this side. You do the total of this side. 0, 0, 2, 15, 16, 17, 1 carry, 11, 12, 13, 14, 1 carry, 8. 8,47,200. 8,47,200. Sorry. 8 lakh 0, 0, 2, 7, 13, 1, 8,37,200 is the total of the debit side. Credit side total is 10,40,000. Now we'll see the difference. 0, 0, 8, 2, 0, 2. 2,02,800. 2,02,800 is gross profit. Gross profit. This gross profit will be transferred to, carried down, transferred to profit and loss account. So here, from here we will start the profit and loss account. So gross profit. This gross profit will be brought down in the profit and loss account. Credit side 2,02,800. 2,02,800. Now come to the next. We have completed the trading account. We have completed the trading account. Now come to the profit and loss account. So start from the top, debit side. You see the trial balance debit side. First item is trade expenses is indirect expenses. Trade expenses. We'll write all indirect expenses and indirect incomes in the credit side. Indirect expenses and losses this side, debit side in the PL account, and indirect incomes and gains in the credit side of profit and loss account to find out the net profit. So you see the debit side of the trial balance. After wages you see the trade expenses is 5,000. So write it directly in the outer column 5,000. There is no adjustment related to trade expenses. There is a one information given regarding the trade expense in the credit side of the trial balance, that is trade expense accrued but not paid. Outstanding trade expenses. As this information is given directly inside the trial balance, it means it's not an adjustment entry. It's not an adjustment. So what we will do, we will write that information outstanding trade expenses where in the liability side of the balance sheet directly. Now come to the after trade expenses. Next is traveling expenses. Traveling expenses. Traveling expenses. Traveling expenses. This is also indirect expense. Traveling expenses is 3,800 is traveling expenses. After that you see rent paid. Rent paid. Rent paid. Rent paid is how much? Rent paid is 16,500. And regarding the rent, it is given that in adjustment number 6, you see the adjustment number 6 regarding rent. Rent is paid for 11 months. Rent is given in the trial balance is rent is 6,500 and this rent is of 11 months. So when we divide by 11, then you know that the per month rent is how much? This is the rent per month. Rent per month is, it means rent per month as per the information is 1,500. 16,500 is the rent paid and it is given in the additional information that this rent is of 11 months. This rent is of 11 months. So when I divide it by 11, then I come to know that the 1,500 per month is the rent. So 1 month rent is outstanding. So you write the information in the inner column 16,500 rent of 11 months and you add outstanding rent of how many months? 1 month. Outstanding rent of 1 month, that is 1,500. So total rent, you write it in the outer column, 18,000 is the total rent of the financial year 2018-19. After rent, you see the establishment charges. Establishment charges. It's an indirect expenses. Establishment charges is indirect expenses. Establishment charges is 18,000 is the establishment charges. Write the establishment charges. Thereafter you see interest on Yadav's loan. Interest on Yadav loan is given 1,500. And we have already done the calculation over here related to interest on Yadav loans. Interest on Yadav loan, as per our calculation, it is 2,500 and it is only 1,500 is given inside the trial balance. It means 1,000 is outstanding interest. So add the outstanding interest. Outstanding interest is how much? 1,000 is the outstanding interest. So outer column you write 2,500 is the outstanding interest. Thereafter you come in the credit side. There is no as such indirect expenses in the debit side is left. Now credit side you come, rent received. It's an indirect income, rent received. You see the rent received. Is there any additional information related to rent received? Related to rent received in adjustment number 6. Rent is paid for 11 months but is received for 13 months. Rent received for 13 months. So we will calculate the rent per month. Rent received given in the trial balance is 3,900 and it is for 13 months. It means per month rent is 300 rent per month. So 1 month rent is unearned rent. So what you do, you write the 3,900 rent of 13 months and less unearned rent. Unearned rent means rent received in advance 300. You deduct it from this amount. So your rent is 3,600 is your rent. 3,600 okay is the rent. After that you see discount. Right in the credit side, discount. This discount which have a credit balance indicate the discount received. Discount received is 600 is the discount received. Directly we will write in the outer column. Okay, there is no other informations related to indirect income or any gain related to profit and loss account. Okay. Now come to the next, after discount 600, discount which is given in the trial balance credit side, it's a discount received, it's an indirect income. Now come to the adjustment. Adjustment number 1 is already treatment is done in trading account. Other part of the adjustment number 1 will be treatment will be done in the balance sheet liability side. Adjustment number 2 related to interest on loan, we have done it. Adjustment number 3 is related to further bad debts. Further bad debts. Further means additional bad debts. Further bad debts. So further bad debts is how much? Further bad debts, additional bad debts. Information number 3, adjustment number 3, sundry debtors include an amount of rupees 2000 due from a customer who was become insolvent and nothing is recoverable from his estate. So this indicate the further or additional bad debts. Thereafter, adjustment number 4, create a provision of 5% for doubtful debts. 5% for doubtful debts. Sundry debtors given in the balance sheet is how much? Given in the trial balance, sundry debtors given in the trial balance is 1,42,000. Out of these 1,42,000, the further bad debts you deduct it first. Less further bad debts. We will deduct the further bad debts first. So further bad debts which is given in the adjustment is 2000. After deduction of this amount, the debtors is 1,40,000. So we will calculate the new provision for bad and doubtful debts. New provision for bad and doubtful debts. For bad and doubtful debts. In which amount? 1,40,000. 1,40,000 into new provision for bad and doubtful debts is 5%. So 5% of 1,40,000, it is 7,000. New provision is 7,000. New provision for bad and doubtful debts. So it is 1,33,000 after new provision for bad and doubtful debts. Now you calculate the new provision for discount on debtors. New provision for discount on debtors. New provision for discount on debtors will calculate on which amount? Will calculate on 1,33,000, this amount. From debtors, first of all we will deduct the further bad debts. Thereafter we will deduct the new provision for bad and doubtful debts, and whatever the amount left, on that amount we will calculate the new provision for discount, that is 2%. Adjustment number 4, 2% discount on debtors. So 2% discount on debtors is 0662, 2660. So here further bad debts is given, further bad debts is 2000. You add new provision for bad and doubtful debts, add new provision for bad and doubtful debts, that is 7,000. We have calculated over here 7,000 is the new provision for bad and doubtful debts. There is no old provision for bad and doubtful debts, that's why we will write the amount directly in the outer column. Next is provision for discount on debtors. 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 We have calculated the provision for discount on debtors. The new provision for discount on debtors we have calculated, that is 2260 rupees. 2660 rupees. 2660 rupees is the new provision for discount on debtors. Okay. All other adjustment we have done it. Now we'll see which side total is more and which side total is less. Now we'll do the total. First, credit side total is more than debit side total. So we'll do the total of credit side first. We'll do the total of credit side first. So credit side total is 0, 0, 0, 7, 0, 2. 2,07,000 is the total of credit side. 2,07,000. And now you see the total of debit side. This side total 0, 6, 8, 5, 13, 13 and 6. 13 and 6, 19, 1. Carry 9, 17, 25, 27, 27 and 9. 27 and 9, 36, 37, 38, 3 carry 58,960, 58,960. Now you will find out the difference to know the net profit. So net profit is net profit. Now we will find out the difference. Now we will find out the difference. 2,07,000 is the credit side total and debit side total is 58,960. So difference amount is 1 carry 9 and 8, 17, 1, 4, 1,48,040 rupees. 1,48,040 rupees is the net profit. This will be transferred to capital account. The net profit will transfer to capital account in the balance sheet. Okay, net profit will transfer to capital account. 1,48,040 rupees will be transferred to capital account. Now come to the balance sheet. So start with the liability side. First, you see the trial balance credit side, the amount of capital given in the trial balance is your opening capital. That is 2,50,000. Write the amount in the inner column, 2,50,000. Then you add the net profit, which is calculated by us from the profit and loss account. The net profit is 1,48,040 rupees. 1,48,040 rupees is the net profit. There is no drawings, so we will write the amount directly in the outer column. We can write it 040,893, 3,98,040 rupees. Thereafter you see loan from Mr. Yadav. Loan from Mr. Yadav. The loan from Mr. Yadav is 20,000 and add the outstanding interest. Outstanding interest on Yadav's loan is 1,000. We have done the calculation already. So including loan and interest, the total loan is 21,000. Loan amount is 20,000 and outstanding interest is 1,000. So total is 21,000. Thereafter, see in the trial balance credit side, outstanding wages is given. So write the outstanding wages which is given in the trial balance. It's not an adjustment, so we will write directly this amount, we will write in the liability side. Thereafter, trade expenses accrued but not paid. This is also called outstanding trade expenses. Outstanding trade expenses. Trade expenses. Outstanding trade expenses. Trade expense accrued but not paid means outstanding trade expense is how much? It is 500. You can write the account with the actual name. Given in the trial balance is trade expenses accrued but not paid, you can write it, or another word you can say it's an outstanding trade expense. Sundry creditors, you write the amount in the inner column because there was one adjustment related to sundry creditors. Adjustment number 1, goods purchased but not recorded. So purchase account debit to creditors account. So this will be added. Unrecorded purchase will be added by us. Unrecorded purchase we will add it. That is 20,000 is the unrecorded purchase. We will add it and write the amount in the outer column 1 lakh. Okay. Come to the debit side of the trial balance and we will see the assets. So debit side, you find out the assets. Your sundry debtors is, we will write the amount in the inner column because there are so many adjustment related to sundry debtors. 1,42,000 is the debtors given in the trial balance. You deduct the further bad dates means additional bad dates which is given in the adjustment number 3rd, 2,000. Rest is 1,40,000. Thereafter you deduct new provision for bad and doubtful debts. New provision for bad and doubtful dates. Bad and doubtful dates. New provision for bad and doubtful dates. That we have calculated 7,000. You deduct it. 2,000 further bad dates. New provision for bad and doubtful dates. Again you deduct less provision for discount. New provision for discount. New provision for discount on debtors. New provision for discount on debtors is 2,660. 2,660. You deduct it and write the amount in the outer column. So it is 1,30,340. Okay. Now come to the next. After debtors, next item is cash. Cash given in the trial balance is 6,000 is the cash. After cash, next is fixed assets. Fixed assets. There is no depreciation. So we will write the amount directly in the outer column 3 lakhs. In outer column column 3 lakhs. This is fixed assets. There is no depreciation. Coming to the adjustment. Adjustment number 1 we have done it. Adjustment number 2 we have done it related to loan. Adjustment number 3 is done. 4 is done. 5 is 3 months lighting and heating bill due but not paid. Outstanding heating and lighting bill. Outstanding heating and lighting bill is 3,000. This is your outstanding expenses. Thereafter rent is paid for 11 months. So outstanding rent of 1 month. Outstanding rent we have calculated that outstanding rent was 1500 was the outstanding rent. We have already done the calculation in the working note. Thereafter rent received for 13 months means unearned rent. Rent received in advance. You can say rent received in advance also. Unearned rent is 300. Means rent received in advance. This one 300. Thereafter closing stock. This side we will write the closing stock. Closing stock is how much? Last adjustment 90,000 is the closing stock. 90,000 is the closing stock. Okay. Now we will do the total of both sides. Assets and liability, we will do the total of both sides. Thus both side total must be equal. Both side total must be equal. Now we will do the total. So this side total is 0, 4, 3, 6, 9 and 3, 12, 2, 1, 5. 5,26,340. 5,26,340 is the total. So balance sheet is matched. Okay, balance sheet is matched. This line is for detail for addition and subtractions. This is for detail, and final amount we will write it this side. So debtors is 1,42,000. Out of that further bad debts is 2,000. So we will deduct it. Thereafter we will deduct the new provision for bad and doubtful debts. Thereafter we will deduct the new provision for discount on debtors. So this is the final amount which we will receive from the debtors, realizable amount. So cash is this much, fixed assets, closing stock. In creditors I have added the unrecorded purchase which is given in the adjustment. So total creditors is 1 lakh. Here on loan from Mr. Yadav was 20,000 and outstanding interest what we have calculated already in the working note 1,000. So total loan is 21,000 including outstanding interest. Profit is added to the capital. Okay, so is it clear?